Hey friends, and welcome back to another session of technical analysis of the natural gas markets. So let's have a look, you know, on the charts and try to study the technical analysis and try to predict, the next moves based on the charts. Before that, let's take a step back, and if you remember, we discussed about this double top somewhere here, roughly around this level. I think this is the double top we discussed, if you remember, not last week, but the week before last. So that's the last video on the channel. So this was clearly a double top, and we were, when we closed on Friday, I think we were here, and then I did mention there is a change in trend. So, basically, I have a strategy here to identify the change in trend. If you have not seen that particular video, I would appreciate if you can go back and look at the mastering series change in trend uh, session, which is already there on the channel, and I have used that to identify the change in trend and to get or to catch the double top here. So we've seen the double top here formed. So Friday we were here somewhere, not this Friday, but Friday, maybe last to last Friday, and then Sunday open was a gap down, and then eventually we see double top here, nicely retested. So this is the double top here, and then it's gone down, nicely retested, and then there you go. There you go. It's the target complete, and then we can see a steep drop in the price, a bit of you know bulls taking a control here, pushing the price a bit up here, and then eventually the price has gone down here, and we are here at the Friday's close. So let's see what we can see based on the chart. So we are looking at the nat gas markets, and the time frame is hourly. The roughly Friday closing price is 2.18. So if I just try to maximize the chart, it's a nice clear bear flag. So put a trend here. It's a very beautiful flag. Look at the pattern. The way the pattern forms on the charts, really beautiful. Look at that. I mean, it's just a textbook like a pattern here. And that's the flag. Put the pole here. There you go, the pole. Now, arguably, we are in the we are in the bearish trend. And why did I say arguably? Because there is a bit of when I discuss in detail, I'll basically come to that point. But at the moment, the confluences are on the bearish side. So this is a flag clearly pointing to, let's see what is the price it is pointing to. And if you don't know how to identify the targets for the flag, we have a entire completed session on the channel mastering the flag patterns. Again, it's part of the mastering series. I will appreciate, go and have a look at it. I have covered in detail how to identify the flag patterns, how to trade the flag patterns, how to identify the stop loss, how to identify the targets, and how to take the trades. So this is a flag pattern pointing to roughly 2.02. Saying that, let me give you a disclaimer here that this is not a buy or a sell recommendation. This is purely or solely for the purpose of education, where we are just trying to look at the charts, study the charts, and we are trying to identify what could be the potential next moves. Again, these are markets. Whatever we see on the charts, we based on the technicals, we are only having an edge so that the market can move in the direction what we are trying to identify based on the chart patterns. There is, if you look at it, there is no 100% guarantee as in the markets will always move in this direction, but looking at the technical analysis, it gives you an edge to identify where the markets are tend to go, just a probability of where the markets can move. Saying that, we saw, based on this flag, we can roughly have a target of 2.02. So if I go for a short trade here, look at that candle, broken down, retested nicely. Stop loss can be set here, roughly around target can be 2.02 roughly. That is a beautiful for, risk reward 1 is to 4.5 roughly a trade, which is a very nice trade. Anything about 1 is to 3 is a brilliant trade. I mean, if you get 1 is to 2.5 also is okay. Above 1.25 is always a nice trade, but I would rather want 1 is to 3 risk reward. It's a great trade according to me. So here we are getting 1 is to 4.4, which is excellent rate. So that's the target based on the flag. Now I getting rid of the short position here. And another thing I want to show you here is, if you take a zone here, I'm just gonna map a zone here. So this is roughly a zone. Look at this. I'm just gonna take it here. Look at that. So you can clearly see there is a double top formed. So let me take the part tool and peak 1, top, that is top 1, top 2, and there you go. I'm just going to move it here. Look at the candle size when it is breaking the neckline. It's what I would like to see. Down, retest. The only thing which I didn't want to see for this double top is this particular thing here. So if I just highlight that, put, just take a brush here, and if I just highlight this here, I didn't wanted the price to come above this particular neckline. That is basically not good indications for the bears. So if the market would have closed roughly below the neckline would have been nice, but you know we are where we are. So but I wouldn't have wanted this. But again, as I said, even for the double top, you know the pattern will only negate if we close about 2.234, roughly 2.25. This is again the stop loss on the flag pattern. So and same for the double top. So there are two confluences, a double top and a bearish flag, pointing towards the downside. They will negate when the price gives the closing about 2 point roughly 24 will consider for the moment. Okay, so let's get this out of the charts here. Let me just get this double top out. Okay, so this is what we are seeing on the hourly charts. Okay, nice. So and you can clearly see this is a neckline, and now I'm gonna put another sort of a support here to see. Look at this. This again nice support here. Look at this price taking support on this, breaks down, very next candle up, goes up. Here also breaks down, tries to come up, goes down, again up. So this is where the bulls are active here, roughly 2.10 ish. That's the zone where the bulls are active. So technically we would want closing below this zone. So we want proper closing below this zone, couple of red candles below that zone, just as a confirmation that the bulls have weakened or the bears are taking control. But let's see what happens on the upcoming week. Now if I'm going to go to the 4-hour chart, look at it. We were just looking at this side, but on this side as well, look at this nice support. Comes here, bounces up, comes here, bounces up back, tries to consolidate, tries to go down, bulls taking control, straight back up, tries to go down, bulls pushing it back. So it is, clearly you can see this is a proper support zone. The bulls are just not letting it, go down below this price. So clearly a bullish zone or a support zone here. So on the 4 hour also the same thing. Let's see what the fib says. Is there anything on the fib side? So I'm taking this as a swing. I can take this as well, arguably, or this, but I'm just going to go for the top. So roughly around 3.82, that's fine. But look at this, let me just look at the PRZ, nice support here. So whenever, it's taking support, look at that, nice support, touches, pushes back up, tries to break down, next candle straight up, tries to stay below the PRZ, then breaks down, rejects, and then there you go. So it's nice. Now at the moment it's become a resistance. So the first resistance is roughly around this point, 2.35ish. Next one we can have roughly around 2.42, and then we have the PRZ at 2.51ish. So this is where the bulls will need to take control about this to take the price still higher. But let's see. Again, it's a bit, first we need to negate this bearish flag and the double top here, and then we can go or start look at the high prices. So that's 4 hours. Let's go and see what's happening on the daily. So daily is, again, look at that, beautiful, that support. So I'm just going to push this line towards the body of the candle. So this is the actual zone where the bulls are active, 2.125. Below this zone, I mean, they are literally not letting the bears take control. See this candle, down here bulls are pushing it up, bears pushing it down, but look at that, bulls just pushing it up. So we need a daily close below 2.125 to weaken the bulls or to for bears to take control. But again, the bulls are still strong in this zone, but we'll see how it goes in the upcoming week. I mean, this 2.12 price is, again, it's comparatively a good price for the bulls. I think that's where I can see them takes control here. But again, we can see. So that's where, let's see on the daily side what happens here. So I'm gonna get rid of the flag there. So look at this, there is a steep downside, and then you can have couple of candles in green. So in my experience, whenever I've seen a steep downside and couple of candles green, then this is usually a sign of short covering, and then you can have a big red candle which is here, and then another red candle. So this candle is basically looking at this is making a lower high, lower low, lower high, lower low, still in downtrend. But we'll see what is the next daily candle. This is again a doji candle, so markets undecided. Most of the times on a Friday evening the markets are always undecided. Maybe they're looking at I don't know what they're trying to look for the next week. So most of the times I've seen the Fridays are always doji candles. Let me check. You say okay. So there you go. So this is on the daily. So daily is clearly showing lower low, lower highs. So that means it's downtrend at the moment. But as I said, the bulls are clearly strong in this area, which is below 1.125. Daily close below that will make the bears take the control. But we'll see how it actually pans out in the coming week. Yeah, pretty much that's what I wanted to discuss on these charts. If you think this was a helpful session for you, please give us a thumbs up. Please share and subscribe to our channel. Thank you for your time, and I'll see you in the next one.